Hey there, Mauricio coming to you guys live, and today we're going to be talking about flowing leverage, okay? Flowing leverage comes along with risk management and twin trading, okay? So what I'm going to be doing, I'm going to be explaining exactly how it looks like on charts, on images, so then we can go more into the charts and show you exactly how it is that, and show you specifically the area where I took my $300 account to $31K in 5 months, okay? So I want to show you the strategy exactly how it is. It is going to be something very, very impressive. So write notes, okay? I recommend you guys write notes. So for now, let's see what's happening in the market. We're seeing that the market's actually going up on an uptrend. It's going down, does its retracement, and keeps on going up, right? So we're seeing that the market's creating structure, okay? We're creating structure in the market. We're seeing that the market actually came down to a 38.2 Fibonacci level retracement, and in this area right here, this 38.2 Fibonacci retracement, we're actually utilizing that area for our first trade. Now, when you're doing twin trading along with floating leverage and risk management, your first trade is always the hardest, okay? But it's the one that's going to create you floating leverage. It's going to be the one that's helping you to increase your lot size on your next trades, okay? So right here, what is that I'm utilizing? I'm utilizing buys due to the fact that I am on an uptrend. So I'm seeing uptrend structure, okay? When I see uptrend structure, I want to identify it and put my stop loss and take profits to where their correspond, okay? So let's say it's a 15 pip stop loss and a 30 pip take profit, 2-to-1 ratio, perfect. So we do know our ratios. We know that 2-to-1 is the 15 and 30 pip take profit and so on. So now what's the next step right here? We want to do twin trading. So therefore I'm going to clone this. I'm going to be putting two trades, okay? Two trades in the same area due to the fact that I am twin trading, okay? I am twin trading. I am doing proper risk management, okay? My account's at 1200. If my account's at 1200, what's 3%? 3% is $36 So 3% is $36. Therefore, how many pips am I risking? I'm risking 15 pips, okay? So therefore, you're going to be dividing 36 divided by 15, okay? So 36 divided by 15 gives you 2.4, okay? Gives you 2.4. You're going to move your point decimal one to the left. That'll give us a 0.24, okay? So it's going to give us a 0.24. That's the proper lot size we should be putting for this 3%, okay? Now, if I am putting two trades, what does that mean? I can either put 3 and 3% due to the fact that it's lower than 8%, and it's almost close to 5%, or I can leave it at 3% and cut that 0.24 in half, and it'll give me 0.12 and 0.12 and so on, okay? Now, I recommend that, put 0.12 and 0.12, split your 3% to 1.5% on each side, but if you do want to go a little bit more aggressive on your trades, you can put a 0.24 and a 0.24 and let it ride the wave, okay? So the market actually came up, hit my take profit right here, boom, there we go. It just hit my take profit and I got some profits. Now this one I'm gonna move up to break even. Now when I move up to break even, this trade right here, I forget about it. I completely forget about it, and that's the one that's going to be creating my floating leverage. So when the market comes back down and does a retracement, let's say it came down, did a retracement. Now this retracement, let's say it came down to a 61.8 retracement, okay? This time it didn't go to 38.2, but it did come to the 61.8 retracement. And this right here, we're actually utilizing this area as a new area that we're going to be implementing new buys in the market, okay? So this right here, we're twin trading, and we're using a floating leverage from this one to actually impulse and increment our lot sizes without us risking our account at any point of time, okay? So the only thing that we're risking is our floating leverage, the gains that are actually floating and we have not secured, okay? So right here, let's say the market came up all the way over here, so therefore we're in profits in this area. We're going to do the exact same thing. We're going to be putting two trades. So I'm going to be putting two trades, 15 pip take profit, stop loss, and 30 pip take profit as well, okay? As you guys can see on the previous videos, I've been always giving this example, 15 pip stop loss and 30 pip take profit, due to the fact that I use that a lot in the market. I see a lot of 3-to-1s on USD JPY. That is pretty much the only pair I trade. It's not the only one, but it's the primary one I do trade. But now let's say right here we have 3 trades in total, okay? We have 3 trades in total. One that came up from the previous trade, which is the one down here, and then we have these 2 new trades, okay? So remember, we're going to do twin trading as well. So therefore, what I'm going to do, I'm going to put one take profit on one of them, same stop loss, and the other one only a stop loss, no take profit. Okay, so there we go. We put this one, hits our take profit, boom. And this one, what's going to happen? We're going to be putting our stop loss to break even or a 5 pip above break even. Now, what's going to happen with this one right here? Okay, this stop loss is not going to stay over here. Now, this stop loss is going to be the exact same stop loss from this one. So that's something you got to do. You got to do manually. You got to put your stop loss, move the stop loss from this trade right here, put it up to the same stop loss as this one. So that way, when the market comes back down and hits that stop loss, it takes you out on both trades. One might take you out in stop profit, a little bit profit, but the other one took you out on good profits with it, which is your flowing leverage, okay? And you're going to keep on doing that over and over and over on every single opportunity you see in the market. So let's say the market comes back down over here and comes to a 61.8 retracement once again, okay? Came out once again to the 61.8 retracement. It respected very well this area, and due to the fact that it respected very well, we saw some price action, we saw structure being formatted, we saw some trend line, we saw everything that we need to know that's going to help us verify to actually enter on buys, okay? So due to the fact that we enter on buys, what's going to be the next step? Twin trading, same thing. Okay, we're going to be putting 15 pip take profit, stop loss, and 30 pip take profit, and so on, okay? So once we do that, we do twin trading, clone it, 2 trades at the same area, same exact rule. We're going to be putting 15 pips stop loss, 30 pip take profit. Right when one hits my take profit, which is this one, boom, it hits my take profit. What happens to this one? We put our stop loss. Now, what's going to happen with these stop losses from over here? This stop loss from this trade right here, I bring it up to the same stop loss as this one, and this stop loss from this one, I bring it up to the same stop loss as that one. So now they're all in the same stop loss, okay? So now let's say the market came up and came all the way up over here, okay? So now look at this. We done three trades, okay? Those 3 trades have taken out on profits 30 pips, 30 pips, 30 pips on each one. So therefore it's a total of 90 pips, okay? But not just that, but we have some floating leverage. We have some trades that are actually running in profits. And let's say we did gain all those 30 pips, but this one actually came up all the way to this area as the same as this one. And then this one as well came up all the way to this area, same one as this one, okay? So we actually gained on this one 106 pips, on this one we gained 63 pips, and on this one we gained 29 pips, okay? So if we actually add all these up, so we did 30 times 3 because we did 3 trades that came 30 times 3, that's 90. Plus over here we did 106 pips, okay? Plus over here we did 63 pips. Plus on this one we did another 30 pips, okay? That's a total of 289 pips, okay? 289 pips on just putting three trades with take profits and 2 you let it run, and those 3 that you let run, you never get out of them, okay? You let the market take you out on your stop profit, okay? So let's say the market came back down, let's say we put some more trades over here and all these stop losses are up on this area right here, okay? So the market came back down to this area, it hit all our stop losses, well not stop losses, stop profits, it took me out of this one, took me out of this one, and took me out of this one. So what happened? It took me out in total with all those pips collected plus the pips that we had collected initially. So therefore, and it's not a total of 90 pips now. It's going to be a total of 289 pips. Okay. So you see how this compounds? It keeps on compounding, compounding, compounding. So you're actually utilizing your floating leverage, so you can actually put bigger lot sizes without affecting your psychological aspect, which we are going to be talking about more psychological aspect on the following videos. But it also helps you out on gaining more profits without risking your account at any sort of point. You're only risking your floating leverage, which your floating leverage is money that's just floating, but it's not really yours until you obviously take control of it and put it into your account. So therefore, it does not affect anybody if you do lose your floating leverage, because at the end of the game, it was never yours. It's just something that's leveraging you more to increment your profits, okay? So this is the floating leverage strategy that I use a lot. We will be showing you a little bit more how it looks like in the charts on the following videos. But for now, I do want you to understand how it is its place. And I also want you to understand that you have to be very, very patient. And not just that, but you got to be very disciplined on not taking out your trades, okay? So it's happened a lot to me. I've seen 90 pips in profit. And I'm like, man, I want to take out. Don't take out, okay? Let the market take you out, okay? You want to gain as much profits as you can possibly, so that way you can make more money. You can create bigger flowing leverage, and with bigger flowing leverage, what does that mean? That means that you can put bigger lot sizes. Bigger lot sizes, that means bigger gains, okay? So therefore, it's something that you got to take in consideration. You got to be very disciplined and very patient on the fact of when you are placing your trades, okay? So therefore, I'll see you guys on the next video when we are talking about how to utilize floating leverages, more with numbers, a little bit with like risk management, going more in detail with how much I'm risking, how much I'm gaining, and so on. But that is going to be a more extended video. So therefore, I will be seeing you on that other video. It's going to be kind of extended, but you guys will love it due to the fact that I'm going very much in detail on what is the price action I'm looking for, what is the lot size I'm putting according to certain account size. Okay, so therefore, thank you for joining on this video itself. This is a strategy that took me from $300 to 31K in about 5 weeks. So if I can do it, you guys can do it too. This is the exact same strategy that took me to that area. So master it, study it, practice it, and be as much as patient and disciplined as you can possible. And I know you will succeed as well. So therefore, I'll see you guys in the next video. Goodbye.